My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make a little money. My job, not just to entertain, but to educate, to teach you. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. You know why this market just won't broaden out beyond a few gigantic tech names like NVIDIA, Microsoft, or Alphabet? I'll tell you why. Pool Corp. That's why. Yeah, I blame it all on Pool, a company that sounds exactly like what it is. A business that caters to building, fixing, and maintaining everything pool-related. Swimming, not that kind. See, last night, Pool Corp revealed that it's drowning in the deep end with a horrible decline in its business. And it caused a stunning ripple of pain.
The house of pain.
Through vast swaths of the market today. Dow tumbling 299 points. S&P advancing 0.39%. But the tech-heavy NASDAQ, with less pool exposure and more AI leverage, still jumped 1.26%. Now, unless you own a pool, you may not know Pool Corp. But if you own any stock related to housing in any way, today was probably one of the most horrendous days you've had in 2024. Because the now infamous Pool Corp suggests that its data says there will be, quote, persistently weak demand for new pool construction, end quote, and activity could be down 15 to 20% for the year. See, it's not just new construction. Remodel activity for pools could be down as much as 15%. Bad enough? Pool went very, very deep into the deep end and blamed the consumer. She isn't spending on discretionary goods, including big-ticket items like swimming pools or outdoor living projects. That's why the building materials portion of the business was down 11%. So on the strength, or more accurately, the weakness of the Pool Corp outfit, we saw sharp sell-offs in anything that's even remotely related to a house. That could be Lowe's or Home Depot or Tractor Supply, Builders First Source, companies like Fortune Brands, Masco, Mohawk, fixtures, cabinets, carpet. They all got pulverized today. Look, frankly, I haven't cared for Pool Corp in ages, other than to suggest that it might be tough to build a new pool in California during one of those periodic droughts where they have to limit the water supply. Always bad for pool business. But is this the company? Is it right for the company to blame the consumer? Have the people really reined in their discretionary spending? I mean, geez, Carnival, the cruise line company, reported a record-breaking set of numbers today. And what could be more discretionary than a cruise? More importantly, though, it's clearly hard to figure out what the consumer's interested in or what she's willing to spend on. And you know what? Because of that in a nutshell is why I like stocks like NVIDIA. It's why I come out here almost every night for the last, 5 years and recommend these mega-cap tech plays. It's why I created FANG, for heaven's sake. It's why I don't care one whit about whether this market really broadens out or not. What am I supposed to do? Avoid the stock market's winners until we all start buying pools? Oh, that makes sense. Yeah, we should put all of our stock picking in the hands of pool aficionados. Should we just ignore it when we get incredible pullbacks in enterprise-oriented tech companies like NVIDIA because of pool? Look, many people who spout about the market have a very different philosophy from me. I'm always trying to find, for you, the stocks of good companies that are doing great things and can continue to do great things regardless of the cash-strapped consumer, or the homeowner who stopped renovating, or the swimming pool that doesn't get built. On the other hand, I'm not drawn at all to stocks that may work or may not work if some Federal Reserve official says they may or may not cut rates. That puts me in a position where I have to tell you to own, not trade, but own some stocks that may at times move too high, as you could argue that NVIDIA just did, or that Microsoft has done, or that Alphabet has done, or that Amazon has done, or Apple has done. I own them for the charitable trust because while I like to see I would love to see the market broaden out. I'm not going to help broaden it out myself with my charitable trust money. I'm not going to go into areas that are dependent on, say, the consumer, only to find out the consumer doesn't want that new pool or anything that can help build it. With NVIDIA, yes, the once glorious, now ridiculed as part of some bubble NVIDIA that holds its annual shareholder meeting tomorrow, I don't have to worry about whether the consumer's looking out the back window and say, to build or to not build a pool? That is the question. Don't ask me to divine Hamlet's next darn move, darn it. Don't make me figure out what Hamlet will do if the Fed cuts rates or not. I mean, come on. Cheaper mortgages may not even create more demand for houses, or could, but who knows? All we know is it won't build more houses. You could cut mortgage rates to 5%, and the people with 3% mortgages still don't want to sell. Worse, I could sit here all day and listen to every single one of these Babbitt-type Fed chieftains, what they have to say, because they obviously love the microphone in their gas bags. All the Fed's just a stage now, and these men and women are merely players. They have their axis and their interests, and one man, Jay Powell, plays the only part that really matters. So I say thanks, Shakespeare, and who cares about these subalterns anyway? What the heck does this have to do with NVIDIA? Okay, let's call it the anti-Pool Corp. It's certainly bigger than Pool Corp. Consider the customers of Pool versus the customers of NVIDIA. Pool Corp's customers have no idea if they should put up a pool to increase the value of their home because they can't find another house to move into anyway. The pool customer is strapped. The pool customer is mercurial. The pool customer might just prefer to swim in a pool on a Carnival cruise. The pool customer is probably worried about interest rates because, well, she might need a home equity loan to build a pool. But how about NVIDIA? How about its customers? How about Amazon, Alphabet, and Microsoft? Perhaps 3 of the 4 richest companies in the world. Do these mega cap worries, do they look like they're worried about interest rates? Last I looked, companies that can pay cash don't worry about interest rates. They aren't all that concerned about the Cleveland Fed or the Minneapolis Fed or any of the other regional Feds like St. Louis or Philly any more than they probably care about the ice hockey teams that from those same city. No, check that. The execs at these companies probably care more about the ice hockey teams than the Fed officials because they can't buy the Fed officials, but they can buy the hockey team. Is the NVIDIA customer mercurial? Can the customer walk away from NVIDIA like a homeowner walks away from a Pool Corp deal? Are you kidding? If any one of these companies doesn't buy NVIDIA's chips, the other guy will take everything that customer is going to lose. If Amazon today were to walk away and say, you know what? We're going to make our own chips, I think they'd end up falling so far behind in cloud infrastructure that their clients would clearly migrate to Microsoft Azure or Google Cloud in a heartbeat. They can't wait for Amazon to have a competitive chip. That'll kill their business. In other words, as crazy as it seems after its recent decline, I think it's easier to own, not trade, but own the stock of NVIDIA than it is to own shares in any of the companies that depend on the fickle, feckless, torn, strapped, beleaguered, mercurial, arbitrary, confused, and clueless consumer. If you trade it, you end up missing terrific rebounds like today. See, that's what today was about. Bottom line, to put things straight, I'm not going into the deep end to please those who want to market with better breadth and greater participation. Go buy some Listerine. I'm simply going to stick with the stocks of the best companies in the market and tell you about them. And you know what? If that leads me, heaven forbid, to NVIDIA, then so be it. Robert in New York. Robert.
Hey, Jim, I got to tell you, I love calling your show. I think you're so awesome. I ran out of a steakhouse just now. I'm with my friends to call you because you give me the best advice I've ever had in my life.
Are you having the cowboy or are you going for the tomahawk?
I'm actually having the porterhouse, and I'm trying to watch my weight.
You split it with somebody else, right? Or do you have a doggy bag?
Well, I'm going to probably eat the whole thing.
Okay, Willie, table 1 here. Okay.
Jim, I got to tell you, you brought up a very good point about 4 or 5 days ago when you told everybody, listen, it's easy to make money on the way up, but you got to pull some money off the table, and you're right on the mark. Because it is easy to make it on the way up. It's the concern. It's the guy.
Well, everybody's a genius on the way up. Everyone tells me what an idiot I am because they own the triple X-ray Z by the Google Nasty Pie. All right,
Jim, that's exactly right.
It's
you just
simple
nailed
GOOG. Yeah.
That's why you are the man. But anyway.
Thank you. Let's
Jim,
make some money.
You're welcome. Based on the current share price of this stock, the company seems to be undervalued by 28%, with most analysts rating this thing as a buy. And they're doing a ton of business in Macau. So I think the Macau deal is going to definitely boost their revenue. So are you a winner? Is win still a win?
I got to tell you, win is ridiculous. So Jeff Marks and I talk about it constantly. We have our meeting Thursday at 12. This is like, what do we have to do? What are they doing wrong? And the answer is they are connected in any way, shape, or form to China. Then that this is exactly how they act. And Win is a great company doing incredibly well. We're not going to have any takeovers because the FTC would block it. But I've got to tell you, this stock is way too cheap. I'm not going to walk away from it, even though I do believe it is going to 85 before it goes to 100. And that's what I think of Win. If you think I'm going to dive headfirst into a stock like Pool to please those who want a broader market, do not hold your bad breath. I'm simply going to keep treading water with the stocks of the best companies. Hey, companies like NVIDIA. Hey, by the way, how about a little thank you to Jensen for at the meeting tomorrow, the annual meeting? No, you don't care, right? Because you're thinking about the next big thing, or like uranium. On Mad Money tonight, the consumer discretionary stocks that are working are giving consumers a good deal. But what about investors? I'm detailing one of them. Got kind of fired up there. That is favorite news. The humanization of pets has been on the back burner for a while, but I think Fido could make you a fortune. I'll tell you why. And of course, yeah, we learned that the EU is charging Microsoft on antitrust violations for bundling Microsoft Teams with its other organizations. It's just another ho-hum, yawning, whatever. No. And I got to tell you, I'm bringing Octo on to try to figure out what's really going on. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.